Okay, my lovely friends, and you are all freaking lovely. Whether you're a freak or not, this guy's a little bit freaky. I think you all know that. All right, look, I'm laughing. I'm always laughing. It's a good thing. Friday, May 6, 2022, post-market wrap-up, people. Let's take this all in real quick. So another day of a freak show in this market. Stocks positive and negative and negative and positive. At one point today, the Dow Jones Industrial Average was down about 550 points. We finished down about 90. All right. Now, how about this? Obviously, there's a lot of people here that are getting worked up about this market. But what if I told you that this entire week, the S&P 500 ended lower by 0.2%. The horror of it. Oh my. What are we going to do? You know what I did today? I'm going to tell you what I did today. If you are a subscriber to my free newsletter, link in the description of this video. Okay? I detailed exactly how I played out today. Okay, what I did, well, the biggest thing I did today was this. I have consolidated my energy producers, oil and gas producers. I have held ExxonMobil and CVX, so Chevron, for a very long time. A little while back here, not too far off, I bought Devon, DVN. I happen to like it. I believe sincerely you need to own oil and gas producers here. So what I did today was I closed my position in ExxonMobil. I closed my position in CVX, XOM, and CVX, pulled out a decent profit out of these, and I threw it all into Devon, ticker DVN. Now, you do not need to do this, people. You need to own oil and gas producers, absolutely, in this environment. You're watching crude oil, you're watching natural gas. If you haven't seen anything yet, so these need to be in your portfolio, in my view, if you want to be exposed to the stock market here. I wrote a whole piece today, and I sent it out in my free newsletter about, what's happening here in the market. Is this a correction or something worse? But just real quick, going back, again, you don't need to do this, people. You can still own ExxonMobil, Chevron, and Devon, DVN. I just wanted to consolidate my positions here into one. It's a little easier to get my head around. I own a lot of positions right now. I think most of you know that. So once in a while, it's okay to do that. Pull profit. And I'm not pulling profit because they think that ExxonMobil and CVX are going to drop. I just wanted to add to Devon, DVN. All right. With that said, I also bought IBM, Coca-Cola, Altria Group. So we got ticker IBM, MO, and KO. So look, to me, at the risk of getting ridiculed yet again, I've been getting ridiculed about being a perma bull for a long time. It's been years. Meanwhile, it has been the premier place to be for years. Now, with this regard to this market here, how many of you believe that a correction of some kind was kind of like way overdue? Yeah, that would be me. But again, if you read the article that I wrote today, for those of you that subscribe to my free newsletter, it's all free stuff. Come on now. You know my perspective on this. If you have not checked your email box, I sent out a lot of stuff today talking about how I was moving cash around, what I was doing. In this article I put out, I really would like you to see that. So if you have not subscribed to my free newsletter, do it now and go check out that article. Look, whatever. I want your life to at least be somewhat easier and have an understanding of what's going on around you. It's not too hard. It really, really isn't. I believe sincerely still that this market, again, we're down 0.2% with regard to the S&P 500. Yes, this market has been correcting if you are looking at the S&P or the Dow. And in a bear market, yes, with regard to the Nasdaq, for those of you that need to hear that, this has gone on for a little while. The Nasdaq's pretty easy to figure out why. It got hurt more so than the rest of the indices here is because tech stocks are rate sensitive. But this is a kind of a balancing act in my view. I don't believe for a nanosecond, I really don't, that the Fed is going to be exceedingly aggressive moving forward. You know, all the talk about, look, it's not so much the fact that the Fed is nudging the federal funds rate here, and subsequently we're seeing this action here in the 10-year yield as the market adjusts. It's the market is anticipating, or market participants are anticipating, if the Federal Reserve is really going to start running off its balance sheet. Now let's talk about that for a moment. Who's going to buy the debt? Who's going to buy the debt that the Fed is holding? In my view, nobody. They're going to have to hold it to maturity because, again, you can buy, if you're a person out here that likes to own debt as opposed to anything else, let's just say, I'm not even going to ridicule people that like to own debt. Okay, I understand some of that perspective. Believe me, I do. But let's just say you want to go out. You know, I want to go out and I want to own some debt. Well, you could go out on the open market and invest in debt that's yielding higher than what the Federal Reserve wants to sell anybody. So the Fed's going to have to hold this stuff. There's not going to be any meaningful wind down of the Fed's balance sheet, okay? And they're going to inflate another way via the crisis. You know, that's what they're going to do. You know that. It's like, to me, it's a no-brainer, honestly. And all this other stuff is just fluff connected to it. Anyway, look. So you have the bigger perspective on the market. You know what's going on. Do you honestly, please, I want to hear from you. Did this market need some kind of a correction after going straight up? Probably. Well, for years and years and years and years and years and years. Maybe it's due. Maybe it was overdue. Look, there is still a distinct possibility, people, okay, that this market will end the year higher. I still stand by that. I didn't change my perspective at all. Believe me, again, I read the comments. Oh, Greg's turning bearish. Oh, you know, Greg's doing this. No, absolutely not. Again, look, the market is kind of like a twisted thing. Absolutely. And yes, I have said I am the market. Maybe I'm a little twisted too. You got to be twisted. If you are not a little twisted in life, well, then you're like really twisted. And this business that I am in, it's, well, it'll play with you a little bit. There's no doubt about it. And you got to stay calm. You got to stay relaxed. You know, you got to keep the action below the waist. You know what I'm talking about? I think you know what I'm talking about here. Yes, I told you I'm twisted, people. Look, I don't want anybody out here to panic or get their feathers ruffled or panties in a bunch or anything like that. Understand it. Look, I always say look at the big picture. And the big picture is what we're seeing now is something that I think needed to happen. I've been explaining this for the longest time. If you go back to look at the videos that I did at the end of last year, I said two things were going to happen. A few things, but two specifically. One, expect extreme volatility in the stock market. How did that work out? Pretty damn good. Cryptocurrencies as well were going to be volatile. I also said we were going to see surging inflation. I mean, I pretty much nailed this stuff to the wall. Don't believe me. Don't believe me. Go check out my videos at the end of last year. So none of this really surprises me here. It really shouldn't surprise you if you are a follower of this blog. Look, again, like I said, you got to understand what you're looking at. You got to sit back and take in the bigger picture. With regard to this being the big one, people, it's not the big one. I'm sorry to tell you that. The 10-year yield today hit 3.13. Okay, not a surprise to you. In fact, I threw out a number just a few days ago. I said we were going to get to like 3.25 with regard to the 10-year yield. And we're going to get there. There's no doubt about it, in my view. And then I think we're going to settle somewhere around there, and we're going to see what happens moving forward. You know, look, a lot of the talk from the Fed, the rhetoric, the nonsense, they really want to fight inflation, which is bullshit. They've gone out of their way to create it. And I mean way, way out of their way to create inflation, buying everything, becoming the lender and buyer of last resort, funneling dollars around the world here, buying assets like there's no tomorrow. With regard to the Fed's balance sheet, go look at it. It looks like it may be leveling off here at around 9 trillion. But again, they're going to find another way to inflate. You think that's it? And I already told you how it works. Look this up for yourself. The Fed has way more assets on their off balance sheet holdings there that is even visible on their actual balance sheet. Look, you can't believe a damn thing out of this organization here. This is public enemy number one. Public enemy number freaking one. They make John Dillinger look like, I don't know, a fairy or something along those lines, a tooth fairy. It's out of control. And they're getting away with everything they're doing. And something else too, but people aren't aware. The Fed is going to buy this market. They say, that they don't buy stocks. Oh, they buy stocks. They buy exchange-traded funds as well here. They can do anything they want at any moment, And I think you are all aware of it. And they're not done, in my view. They're not done. There's a destruction going on here, and it's been going on for quite a while. That is the middle class. It's getting wiped out. Our economy is in free fall. This is also by design. There's nothing that's going on today that is not deliberate. The fact is the stock market has gone straight up for freaking years. People have made unbelievable amounts of money in this market. Maybe it's a time to give a little bit back here, but I don't see anything going on here yet. All right. Maybe you do. Maybe I'm blind to it. Please, without calling me names or anything like that, lay out a concise case as to what I am missing. Greg, you know what? You should be looking here. Look over here. I am more than willing to learn things. I only get rid of people and I block them immediately. All right. When they start calling me I'm not out here calling people horrid names here. There's no reason to personally attack me. Everyone's entitled to their own perspective on the market. Okay. That's why there are bulls and there are bears. Remember this. Bulls make money. Bears freaking make money. Pigs get slaughtered. Okay, but you got to understand the picture. You got to look at what's happening around you. So look, I understand, believe me, that there's a lot of YouTubers trying to twist your mind. I probably am the only non-mainstream guy out here who's not screaming from rooftops that we're not in some kind of a crash. And I know a lot of you believe we are in a crash, but look, I'm looking at the technical definitions of things, all right? Doesn't mean that we're not in a crash. I just don't see the debt market giving me any real signs. With regard to the 10-year yield, you knew what's going to happen. I'm telling you right now, we're going to 3.25 on the 10-year yield. And the driver of this market is the debt market. The market doesn't drive itself. The driver is the debt market, henceforth why the Fed has gotten in here and continues to buy the debt to keep rates suppressed, and they're not going to stop. Okay, they can say whatever they want to. In order for the Fed to keep rates wherever they want to keep them, they have to buy the market. They can't just say it. Oh, we're going to keep the 10-year yield. Or we're going to keep the yield curve in this fashion. They have to get into the market and make it happen. They can't just say it. Imagine having that kind of power, just saying something and it just happens. It's just not the way it works. Anyway, people. What else did I want to say? So gold and silver today not doing too much despite global debt surging at its fastest pace ever. That's the biggest rigged part of this market period at the end. Cryptocurrencies here. Okay, Bitcoin around 36,000. Whatever. Lovely. Just freaking beautiful if you ask me. Anyway, look, the whole picture is set up for you. You know what's going on here better than anybody. And I don't want you to rattle. I don't want you to be afraid. Turn off these freaking people that are trying to scare the living shit out of you so you watch their videos. All right? Anyway, look, keep your eyes on these things. And go check your freaking email. And if you haven't yet, please subscribe to my newsletter. It's literally free. Okay? What do you got to lose by subscribing to my newsletter, people? All right, look, this guy here loves you a lot, and I mean that. So being that it's Friday, well, you're not going to see me till Sunday. For my markets, a look ahead. I got such a crazy... I am so busy for the next few days. It's just out of control. Put that aside, you will see me Sunday. So what we're going to do now, you and me, we're going to bring it in, okay? Bring it in. Let's embrace this moment together, okay? Because it's vitally important. Honestly, people love each other, care about each other, be charitable. Embrace this. Let this be who you are. And this whole entire world is going to become a better place. It's got to start somewhere. Why not with you and me? You got it? All right, look. That's it. Love you a lot. Please comment here. Tell me what I'm missing as well. Okay, I would love to learn, but be nice to me. There's no reason to call me names or anything. Just say, hey, Greg, look, you know what? You're a nice guy. At least I think you are. Or maybe, Greg, you know what? You're really not such a nice person, but I'm going to describe to you what I think is going on. Hey, I'm all about them. All about it. I want to know what you think. I really, really do. See you later.